So GM to all Black Swan event survivors. Yes, another one over this weekend, USDC with the depeg, and now we're seeing Bitcoin have a bit of a bounce here and potentially catching a large bit of bid as we're seeing Satoshi's vision play out. The banks are collapsing, the Fed's response to this to print more money, and of course the Life Raft BTC showing some signs of revival here. So this, if anything, just has to be seen as a bullish event, a Black Swan USDC being knocked off $1. Can you imagine? People have always thought that USDT was the stable coin that was going to get nuked, but it was the BlackRock backed USDC that came under serious fire here this weekend. It has now repegged. We're going to dive into a load of things here and try and get up to speed over what has happened over this past weekend. If you enjoy the content, please ensure you do subscribe to the channel. So on screen here, we have a monthly time frame for Bitcoin. As you can see, the previous month, that small green candle, we come up, we hit 25K. That was a previous area of resistance. We were rejected from resistance. We then dropped back over this last Saturday evening, all the way to the previous monthly support around 19.5 to 20K, a big historic level, previous all-time high territory. We have then had a nice response here with a rally to 22,100 as we're filming right now. So in terms of the technicals, a lot of things have played out very, very cleanly here, and we did get that CME gap fill in that mid 19K region. You can see it there. That was that CME gap, came down, filled it, and now we are rallying from here. Clearly, we are not out of the woods. At this point in time, there could be a lot of things that unfold today with US banks reopening and potential for people to start bank running from smaller regional banks. But trouble in banking, centralized banking, should in theory be bullish for decentralized banking and that of the Bitcoin network. So in terms of the scenarios from which we can catch a bid here, this is definitely the most bullish. And this is what happened back in 2008 when Satoshi came up with the genius idea that was Bitcoin. So let's jump into what the heck has been going on. Are the Fed about to pivot? Are we being telegraphed that QE is back on the menu? Is it all but QE apart from the name? Are they just playing the narrative? No, we're not bailing out the banks here, but technically they are. Well, it does seem at this time that they did break something in TradFi. Rates are extremely high. They went up very, very quickly, and now we're seeing the first casualties emerge. So the Fed tweeted this yesterday. Janet Yellen was on TV. Her kind of moment in the spotlight was rather shaky, to be honest with you, and she did not convey a lot of confidence in the market, but the statements are more confirming of what is actually in place here. So this was the tweet: Federal Reserve, the US Treasury, the FDIC issue a statement on actions to protect the US economy by strengthening public confidence in our banking system, ensuring depositors' savings remain safe. Previous FDIC insurance limit was $250,000, but it seems that this has been removed and there is no limit. So your funds in these failing banks are safe. So Macro Alf with a tweet thread here, massive announcement by the Fed and US policymakers. The gist of this, all depositors of SVB, that is Silicon Valley Bank. You may have seen some dudes out in California wearing their Patagonia gilets, queuing outside the bank over the weekend. While members of this bank and also Signature Bank, which has been closed down here, will be made whole, and a new facility to provide liquidity to banks under stress also been enabled as well. So this sounds very much like a backstop, and it seems that the Bitcoin market is showing a bit of a whiff of this with the bid that has stepped in here off the back of a pretty incredible weekend. So maybe this is how they get away from calling it an actual bailout. It says shareholders and certain unsecured debt holders will not be protected. Senior management has also been removed. I've also seen tweets and information suggesting that major shareholders have actually been selling their shares as of the last few months. So this is certainly the right thing to do. They should not be protected and probably brought before a court. And depositors will have access to all of their money starting Monday, March 13th. Of course, one of the depositors to this was Circle with USDC, which caused the USDC depeg. They had around $3 billion in the SVB bank. So within the statement, they talk about ensuring the US banking system continues to perform its vital roles. After receiving a recommendation from the board of the FDIC and the Federal Reserve and consulting with the president, Secretary Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank in a manner that fully protects all depositors. Depositors will have access to all of their money starting March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. So it sounds like the actual banking institutions are paying for this one, but we also know that the taxpayer typically bears the brunt as well, so take that with a pinch of salt. But what you can see from this is that depositors being made whole. Clearly the institutions here do not want bank runs ensuing from other regional banks, which is what can potentially happen here. Today, we can all do banking from mobile apps at this point in time, so if you're worried about your bank, you could try and move your funds off ASAP, and this could be a cascading effect across the markets. So the action they're taking here is to say, look, we're providing a backstop, please don't do that. So I think that is the message being received loud and clear. We're also announcing a similar systemic risk exception for Signature Bank of New York, which was closed today by its state chartering authority. Take note because that is a crypto-friendly bank, and these crypto-friendly banks seemingly are being removed almost on a daily basis at this point in time, making the kind of on and off ramps for US participants in the crypto economy rather difficult. And again, they reiterated with Signature Bank, no losses will be borne to a taxpayer and depositors will be made whole. And finally, the Federal Reserve Board on Sunday announced it will make available additional funding to eligible depository institutions to help assure banks have the ability to meet their needs of all of their depositors. So Alf says this is how the Fed intends to backstop other liquidity issues, a new facility called BFTP, the Bank Funding Term Program. The idea is to provide banks with an alternative to liquidate their bond holdings when in need of raising liquidity to meet the deposit outflows. So this was kind of the issue. You've got everyone doing mobile banking these days, and we have fractional reserve banking. So a bank run is pretty simple for it to actually take hold, especially in the advent of social media. If people get worried all at once, there's no way they have the cash on hand to actually meet all of their depositors' needs. So in terms of this BTFP, this is the new financing made available. So a brand new term here, offering loans of up to 1 year in length to banks, savings associations, credit unions, and other eligible depository institutions, pledging US treasuries, agency debt, and mortgage-backed securities, and other qualifying assets as collateral. These assets will be valued at par. The BTFP will be an additional source of liquidity against high-quality securities, eliminating an institution's need to quickly sell those securities in times of stress. The big magic number here is $25 billion. This sounds like that is the backstop figure. A lot of people getting very bullish about this, saying that this is kind of a form of quantitative easing here. They're providing a big backstop of funds, and seemingly this having that positive effect on risk assets and the like of BTC. So after receiving recommendations from the board of the Federal Deposit Insurance Corporation, FDIC, Treasury Secretary Yellen, and after consultation with the president, I think he may be speaking on this today as well, approved actions to enable the FDIC to complete its resolution of Silicon Valley Bank in a manner that fully protects all depositors, both insured and uninsured. These actions will reduce stress across the financial system, support financial stability, and minimize any impact on businesses, households, taxpayers, and the broader economy. Basically, he says all HQLA bonds and not only treasuries are eligible. Banks can post them to the Fed to raise money, and bonds will be valued at par. So all the negative mark to market from unhedged bonds is not considered with this facility. Essentially, this has meant that the markets are now pricing in quite a different scenario to just 1 week ago. We have, of course, the FOMC meeting in around 1 week's time from now, and we have the CPI tomorrow, the PPI on Wednesday. So in terms of the chance of a 25 basis point rate hike, this was like 68% chance back on the 6th of March and a 31% chance of a 50 bips rate hike. Now on the table, a 68% chance of 25 basis points, 0% chance of 50 basis points, i.e. the markets think the Fed's already breaking something. They can't go really much higher. 50 basis points will be just hugely detrimental. And now we actually have no rate hike coming in at roughly 1/3, 31.5% chance here. So extraordinary times in which we live. And as you can see, the landscape here is shifting rather quickly. Onto the USDC news, of course, depegged. People selling their dollars for around 90 cents or less on Saturday. Now, an update here from Jeremy Allaire, who is CEO of Circle. Updated thread. We are heartened to see that the US government and financial regulators take crucial steps to mitigate risks extending from fractional banking system. So as we read previously, depositors are secure here. They're being backstopped. And so 100% of their deposits at SVB are secure and available today. That was over $3 billion. So this is obviously very bullish news for USDC. There will, of course, be reputational risk associated with this and a loss of faith in stablecoins, which again, a lot of people will be converting from stablecoins to denominating in the likes of Bitcoin and Ethereum. This is obviously welcome news. He goes on that 100% of USDC reserves will now be safe and secure and will start transferring them from SVB Cash to BNY Mellon. So I think most of their funds are held with BNY Mellon. With the closure of Signature Bank as well, which was announced tonight, that was last night, we will not be able to process minting and redemptions through Signet. We will be relying on settlements through BNY Mellon. And additionally, we will be bringing on a new transaction banking partner with automated minting and redemption starting potentially tomorrow. No idea who that is going to be, but we've seen previously from the news cycle, Kraken Bank is coming. We do need more on and off ramps and secure banking institutions. And what would be best than using one of our own with Kraken Bank? So hopefully that comes out sooner rather than later. You can see from this chart here, USDC now repegged to the US dollar. Some crazy wick action there over Saturday, down to 86.6 cents. I can see there. Incredible stuff. Big pat on the back if you are able to survive this. We all deserve a medal at this point. Then here comes the game changer from CZ of Binance. So let's have a little quick flashback, a walk down memory lane to even more fun times, the FTX collapse back in November, where CZ came out with bullish headlines, Binance committing $1 billion to the Crypto Industry Recovery Fund, which was stored in BUSD. BUSD, of course, being nuked by Gensler & Co. So here we have it. The $1 billion of BUSD will now be converted to assets, crypto assets, Bitcoin, BNB, and Ethereum. So we now have the TWAPper in the room, Mr. CZ of Binance. There will be consistent bid here on the markets as they convert those $1 billion slowly into those three assets there, Bitcoin, BNB, and ETH. You can follow along online via the link there. And as you can see, the BNB token had a nice pumperoo off the back of this announcement around 8 hours back from now. So of course, him providing bid to the market to the tune of $1 billion. What we know is that if you actually put $1 billion worth of cash into these markets, the market cap of those assets goes up quite a bit more than that. Realistically, 1 billion must equate to 5 or 10 in market cap for assets when you put it into the market, especially depending on how liquid those assets are or not. And so traders, investors right now are able to front run a lot of this money. We're literally seeing a very similar playbook. It's like we've seen the movie before, the LFG funds. When that happened, you remember what happened to BTC back then. Significant bid in the market and a FOMO rally did happen. Now, the other question is with the likes of CZ and Binance saying, look, we don't really trust stables anymore either. Will other treasuries, other crypto-based institutions also follow suit here and start converting their dollar stables into the likes of Bitcoin and ETH? I wonder if that will start to happen here, which of course would be a great thing for the overall health of this industry. I really do think that this has been a massively eye-opening experience over this last weekend, and denominating in either Bitcoin or Ethereum or both is probably the sensible thing to do going forward, as we've experienced twice now this last year that your stables can't even be that stable. Final piece of information for you to leave off here: in the open market operations, PBOC, that is the People's Bank of China, injects a net 34 billion yuan into their market. It's around $4 billion US in one go coming in from the Chinese. So as we're seeing, we're getting QE over in the East. We're starting to see the early signs that QE is back on the menu from the Fed, i.e. the West. And when you have both the East and the West printing money, of course, risk assets should start to rise. So this could be the early innings of signs for the next bull market to be born. Don't want to get ahead of things too soon, but we're seeing the narrative really front and center now in the market's mind. And you can see from the BTC chart, the market can smell something happening here. So we will leave things off here. 22,139 Janet Yellen backed US dollars per BTC. Drop me a comment down below. What the heck has happened over this weekend? Your thoughts and opinions are very much welcome, and I will see you again in the next one. Peace.